Hi, everyone, and welcome to Mish's Market Minute. I am your host, Mish Schneider, and as we are having this incredible correction in the market, I'm looking at some of the stocks that have been recently reported in the last couple of weeks. This will be the last edition for this quarter of anything on the earnings report. But I thought today would be a unique opportunity to look at some of these symbols that have reported recently, because this is the time, if you're not already engaged in the stock market, that it might be a good time to actually start looking at some of these interesting different sectors. And I'm going all over the place from gaming to hotels to food to biotech to tech. And so I think you'll see a broad range of stuff here. And what I'm hoping to accomplish is to give you a good actionable game plan of support levels to be looking at, or if not support levels, levels that have to clear for us to say it's safe to get into the water. So here are the stocks that I'm looking at for you today. I'm not going to read them to you because that'll take up time, but I always like to give you the list of symbols so that you can look back on it. Okay, so let's start with AMC, hot topic among the Reddit traders here. They started coming in this week and buying GameStop again. So we are looking at this one too. This actually reported, and as a result, you can see that it's still looking pretty good here. Right now, you had that peak high up in January. We never actually filled the gap here. That's what I like to see in terms of the strength of the stock. 527 here, the lows of this whole move down, looks like an interesting area that you would have to see hold. Look at the moving averages here. You actually had what we call a golden cross, where the 50 clears over the 200. And so ultimately, of course, you'd want to see this whole 462. If you come here and look at the real motion indicators, there's no divergence here whatsoever, and it's still showing slight leadership to the S&P. So right now, here's what I would do. Considering we're in a declining market, we don't like to buy falling knives, but you can see that we're going to start to get into some level of support, probably right around 7, maybe even a little higher, 750. So I would watch to see if 750 can hold. Then it's possible that if we start to swing back up, that this high from this day right here, which is 786, so figure 8, if 750 holds, I might still want to risk down to under here, which is 526. But at the other token, I would wait now for it to clear maybe back over 8. So 750's first target. If it breaks down under there, maybe we're going to look more like at 650. Then I think you'd have a really good risk. And again, if it clears 8, you can play it really tight and say wherever the low is over the next couple of days, back over 8, that could be your shorter term risk. A is Agilent Technologies. And again, this was another stock that was doing really well. Look at this peak here. And now you can see not only is it underperforming, but the momentum had already broken down. And this is, again, why these momentum indicators are so important. When this was making new highs, the stock was barely gaining in momentum. It eked its way out over the 50-day moving average. So now you're getting finally the price confirmation. So with this one right now, if anything, I might be consider looking at it from a short possibility, especially if the market can't find a floor here. And that would mean risking to over 122.90, so figure 123 or back over the 50 to see if this can make a bigger move down. I would say if you're going to only risk $2-3, you can start looking at profits around here at these bases here around 113 back from the support at these levels, and possibly even hold on to it to see if you can get a move down closer to the 200-day moving average. So that's actually the first short I've talked about in a while. AIG I'm showing you only because this was so involved in the whole debacle back in 2008. And this is actually doing pretty well now. This is American International Group. You can see it's in a bullish phase. It's come back close to the 50-day moving average on real motion. And of course, it's still outperforming. However, with a new high yesterday, and I say a new high, I mean a new multi-month high, and this declining today, if it closes under 43.88 or the low of this day, that would, to me, would mean that we could possibly see a move back down closer to that 50-day moving average. If it doesn't and it holds up, then you could probably say, okay, I've got about 42.50 as my risk point. But again, it would have to prove to me that it can close above 43.88. Otherwise, I'd be looking for that move closer to that 50-day moving average. That looks overall good, though, if the market holds up. In the gaming sector, here's Boyd Gaming, and this also has made a tremendous move up. However, look at the momentum here. Although the momentum did make a new high when this peaked, it's fallen very quickly with the market sitting right here on support. So in order for me to really think about this, first of all, you did have that reversal pattern. I'm just telling you about it. Made a new high on this day, and then on the next day closed under the low of the day before. Now it's getting an inside day as I'm talking to you, but if it breaks down under this 55.50, I would expect to see a move closer to that 50-day moving average, and we may see that indicated here by momentum. So keep that number in mind if you're interested in this stock. 48.46, 48.50 would be one place to look at right now, or if we start to see the momentum really improve here and the price just basically consolidate. Now, this is an interesting stock here as well. This is a semiconductor, and of course, semiconductors have been hit hard. You can see that this also peaked and is coming off with the market, sitting right on the critical support here at the 50-day moving average, below in terms of its leadership. So right here now has to hold. It's kind of already done its 10% correction from this topping pattern that it had here. So now we can start looking for some level of support. So I would say maybe around 60. And remember, I always tell you that when something really strikes me, I like to write it down. So with this one, SIVA, I would be looking at it maybe now at around 60 level to hold, and then you'd have a nice risk down to the 50-day moving average. But I would also watch this momentum indicator carefully to make sure that this doesn't start to break down under the 50. I'd like to see it hold here and maybe give us some indication that the momentum is going to hang in there. Next one is CVS. Now, CVS also was doing very well. And again, look at that. You had the divergence in the momentum. This is why these momentum indicators, I can't say it to you enough, have saved us so much money. They have saved us the money in getting long near highs when we see the divergence in momentum, like I have shown you week after week after week. Even in the NASDAQ stocks and some of those big tech stocks, they have really been hammered now in price, but momentum had already told us they were tired. So in this case, we have the weaker momentum here. What would be interesting is if it cannot break down under the 200-day moving average and starts to turn up, we would have some level of support here at around the 66.36 level. And of course, you can see it's weak here on performance, but this is another one now that's coming into support. So keep your eye on those momentum indicators. And if you don't have them, you can certainly get them through StockCharts. All right, this is Louisiana Pacific. Now, last week I did a whole infrastructure one for you, and I thought that what we looked at was UNP, and UNP, by the way, is still relatively interesting. Of course, it's declined with the market, but it's trying here very hard to pop back as I'm talking to you. So here's another one, Louisiana Pacific, and again, we did have a new high here, or a new multi-month high. And so the day I'm talking to you, once again, is going to be key on whether or not it closes above or below 47.12. Momentum has declined somewhat, but not too badly. It's sort of in line, and same thing with the leadership. So let's say it closes above 47.12. Then I would want to see a move over 48.50, let's say. And I could probably just tell you that from a perspective of risk, maybe you want to look at 43.75. So about a $5 risk, which means that you really would be banking that an infrastructure plan comes in. I'm still thinking that could happen, and that would benefit. Now, we were long Palantir, and we did really well on this stock. We caught this move up. And then we got back in, caught a little bit of a move up. And now you can see here, this was one of Cathie Wood's holdings, that it tried to go up based on the Cathie Wood's movement. And it has no momentum, by the way, because it's a new issue. But look at how poorly it's performing. So essentially now we say, well, where would this be a good buy? So this is where we look at the opposite side of the equation, where we talked a lot about new highs and confirmations of the new high breakdown. Or when I say new high, it has to be at least 6 months. Now we can look at a 6-month low and wait. And we can simply wait to see if we get a 6-month low, and then the next day it confirms with a move over the high of that day and then holds up, giving you a good risk. Are they guaranteed? No. But what I do like is that around this 2250 now, just based on the support you're seeing here from this low, is a place that we can start looking for some kind of bottom. I still long-term think that this is a good stock. Same thing like the one I'm about to show you here, QuantumScape. Now, QuantumScape has also a new issue, no momentum, still slightly outperforming, of course, with the market breaking down under the 50-day moving average. We have skin in the game. We actually bought this at 44.94. We've already taken 2 profit targets in this, so we're holding a tail. But this would be one that I would consider possibly adding back to. So there are a couple of ways to do it. One is right now our trailing stop is right under 49. Okay, so that you could see why we don't want this to break. If this holds and we start to turn back up over 60, or if you really want to play it conservative, wait for 2 closes over the 50-day moving average, I still think that this is a good company. The technology on battery here is very strong for the future. And speaking of, I wanted to give you one solar stock. So this is SEDG, this is SolarEdge. And again, with SolarEdge, we're broken down under the 50. The momentum is under the 200. So the momentum is certainly not giving me any warm fuzzies here. However, if the momentum can get back a little bit here over the Bollinger Band, and this can hold up at these recent lows right here, which again is a new 60-day low, but never confirmed with a close this day above the high of this day, then really what ideally I'd like to see is a move below 264, but not breaking down under the 200, and then a turnaround here. So still watching on those solar companies, but not ready to get in. The next one is BYND, excuse me. And again, we talked about BYND before. So look at that. It's now breaking the 50 in momentum. It's breaking it on the leadership, and yet it still hasn't broken down here in terms of the actual price. So let's look at this 248.73 50-day moving average. We're still pretty far above that. So I'd like to see a little bit more. Here's a classic reversal, by the way. New high. The low that day was 317.24, and the next day it closed under that. So basically what you want to look at now is about a $35 move lower. So that would put this at 315. We already had a 10% move here. So now that's why I like, once we get that 10% move lower out of the way from these reversals, we could start looking at where would we want this to stop. 260, 265, that would be a good place. But remember, you want the confirmation here of this momentum getting back over. Fastly is the next one. Another stock we've been in and out of, have no position in this stock right now. Again, if we look at some historical price action here, in October, this was a low at 62. Now, this has looked very toppy here. Every time it's come close to trying to get anywhere near filling this gap, it did it right here, and then boom, it couldn't go any further. So now you could see momentum is below the 0 line here. So we at least want to see momentum come back. It made a new low here, but it did not confirm into any kind of reversal. So I'd like to see this 68.75 get broke, and again, make a new 6-month plus low, turn around and see the momentum turn around, and then I might get interested in this one again as well. Next one we talked about when we did a whole bet on restaurants and fast food. So this is Cheesecake Factory. This is actually having a gentle correction, but the momentum is also declining. So let's keep an eye on this one. Very much interested in this potentially going forward, because as things go up, this could actually really benefit from that. And so right now, I would say 50 would be a good place without risking too much. Right now, let's see where it holds up. But I'd like to see at least this reverse its couple of days downtrend here and have a positive day. And then we can use 50 potentially as a risk point. And of course, we want to not see this Bollinger Band break down anymore either in terms of the momentum under the Bollinger Band. Now, CF has to do with agriculture. And you had the little bit of the breakdown yesterday, but it's sitting right here on the momentum. So again, another one, I'd like to see what happens here. If it stops going down and the momentum can hold this 50 and stop popping back up, this could be another one that's interesting to look at. I would say right now, probably I wouldn't want to see this breakdown under like 43.50 at this point. So if it holds and comes back up, that's where you could use. You could also go further and use the 50-day moving average, which considering it's sloping up will get higher and higher before you actually get in, unless this thing completely collapses. So Plug reported, and this also has come off, as all the electric cars have come off recently. And right now, this did have a new 60-plus day low, see this day? And it closed above it there. So as long as this low right here at 37.22 doesn't get violated, then you could have an interesting play here. Right now, you're getting an inside day. I'd probably give this one more day to digest unless this thing keeps going and takes back out the 50. But the momentum is certainly not giving me a great sign here. So we'd want to see this momentum start to strengthen even more. So I'd give this a little bit of time, but I certainly would consider it if it doesn't break down, as I said, under this low right here. Let's just talk what that low is again, 37.22. Okay, next one here is Hilton. I wanted to show you something in the hotel, but this made a new, not all-time high, but again, multi-month high, and right now is having an inside day. So this hasn't confirmed as a reversal pattern unless it breaks down under 121, and the momentum is good. So what this is telling me is that the hotel chains are still very optimistic here and well outperforming the rest of the market. We don't need to spend much more time on that. Let's go over here to Ironwood Pharmaceuticals. I don't know why I picked this one, but I saw it reported and I thought, okay, the whole pharmaceutical sector has been getting hit lately. Moderna's done a little bit better. But what's going on with this one? So what's interesting here, and I also like to give you sometimes the cheaper stocks. Look, you have a kind of a floor here at around 865. Again, a new 60-plus day low in the works here at 878. Momentum is very weak, but is looking like it's starting to stabilize. So very simply with this is that I would be looking at this one, say, next week, Monday, and if it gets a close above 920, then you can risk to under today's low, just to see if you can get some kind of a 10% bounce. I don't know anything about the technicals. Now, Mosaic, which is a fertilizer company, of course, with the commodities has done well, but with the market now is showing some stress. After a new high, 6-month plus high, inside day. So once again, 29.54 is important. We have to see a close above that. If we do, Mosaic actually, to me, looks pretty darn good, because if it doesn't close below this 29.54, which right now, as I'm talking to you, it's 29.56, you've got a pretty good risk here, right to under the 50-day moving average. But watch this momentum, because again, you want to make sure this momentum doesn't start to really deteriorate. We really ideally want to see this get back over the 50-day moving average. Okay, a few more left here. I hope this is helpful to you. Next one is SCENX, because I thought, let's look at an industrial type metal, because they've also done very well. We know steel has done very well. And of course, everything corrects when the market corrects. That's just the way it is. Nothing, as I always like to say, if your apartment is fireproof, but the building's burning, trust me, your building is going to get hit too. And that's exactly what we're seeing here. What's interesting right now is the Qs and the semiconductors are up. So the money is going back into growth stocks, which I think might actually overall help the market, market because it was the growth stocks that really got this thing to start tanking. Anyway, in this one, we've got the new 6-month plus high here, and now we're getting the reversal pattern. So you may want to give this a move down to about 1350, maybe even closer to 1250. It's holding here very well on the momentum. And at 1250 or between 1350 and 1250, I'd probably be interested in this with a good risk to under the 50-day moving average. This is another one that I really like. Okay, so that's another one, and it's still staying in the theme. I don't think just because of the rates and everything that all of a sudden in one day we have no inflation possibility coming up. I still think that's going to haunt us here. EHTH used to be one of my favorite stocks, and then it had this big gap down. It reported earnings. They've gotten more users, but there's been no movement outside of this one big bar. Look at that. You've got basically a full month trading within this bar. So that makes it simple because look, you've got the top of that bar and the 50-day moving average close, and your momentum looks like it wants to take out the 50. So if the momentum clears the 50 even before this does, very simply, we wait for this bar at 65.66 high to be taken out in a line with the 50-day moving average to be taken out. And now you might have an interesting play on a health stock that is online healthcare, that if anything comes out about healthcare, which right now hasn't been a major focus of this administration, but one that could be, this is a big place where I would go. Now let's go into the oil market here. Occidental Petroleum also reported. This has an inside day. So once again, with an inside day, what we don't want to see is a close under 25.96. That would mean a reversal pattern and probably a move down to about 22.50, which wouldn't be bad. But if that doesn't happen, then you could still use that 22.50 or even under 24 to play it real tight to see if the oil market's going to go back up. Even though the oil market has come off with the rest of the market, it's still doing very, very well. Okay, let's go to Macy's. I wanted to pick one retail store, so I picked Macy's. Macy's had been underperforming for years, and now you can see here that it's holding on to the 50. It's above the 50 here. Leadership has declined somewhat, but still looks actually pretty awesome right here, which I can't believe I'm actually saying this about Macy's, but nonetheless, as the recovery happens and people go back, you've got a good risk now to right under this 50-day moving average if indeed I would say at this point, it probably has to get back over 16. So Macy's is another interesting play. I like that one too. Toll Brothers, of course, I figured we had to look at the housing industry. And we had that classic 6-month high reversal pattern confirmation here this day. That means we're looking to see if this move could move about 10% lower, and it actually did. But look at the momentum. It's under the 50. So at this point, I wouldn't touch this stock. But if it gets back over the 50 in momentum and starts to show a little bit of leadership, once again, this is ideal when you get these type of situations where they're near a major moving average, where if they start to stabilize and the momentum can show us some sign of prospect of that there's momentum coming back into it, you've got that great risk against a major moving average. That's always what we're looking for. Now, Beyond reported, and then it had some news with McDonald again. It's a little bit volatile here, as you can see. Here's that, well, sort of classic reversal pattern, although not really, because it didn't really close below that low that day. It marginally closed below that day. But right now, look at what this is doing. It's sitting on both of the moving averages, the 50, the 200, but the momentum is terrible. So what we want to see now maybe is some level of consolidation here, some, between, let's say, 155 and 140. And then we want to see this momentum start to pick up a little bit. And it doesn't have to get through the 50, but at least show us that the momentum is there. Beyond Meat is still the king of the alternative meat space and making deals all over the place. So I wouldn't take my eyes off of this. If it got back through 155 with that momentum, that might be interesting. Okay, here was another IPO this year I thought would be interesting to cover because it actually reported, and that's Airbnb. Again, if life is coming back, this could be an interesting. Now, of course, we don't have a lot of information, but you do see a little bit here of a 50-day moving average, so that gives us something. So right now, I would say that this probably has to get back over 200. A $25 risk is a lot. Ideally, I would like to see this maybe come back closer to 190 to get in, and then a risk under 175 would make sense. But if it does get back over 200, this could actually still go up much higher. Airbnb, I believe, is going to be very, very hot as people start moving around again. And so if that's the case, where would be your new risk? If you didn't want to risk 25, then I would probably say, if we take a look here at some pivotal area, you can go really tight here. Under this bar, you had a doji day this day, and you can see it opened at 189. So if you go over 200, just risk 10 bucks to under 190. That would make sense. And the last one with the same theme of the world coming back that reported and actually was moving up over the last couple of days and now has come off with the market is Norwegian Cruise Lines. But again, 6 month plus high, low this day, 28.33. This has to hold the 28.33. And if it does, if your longer term believe that people will start taking cruise lines again, then you can just simply risk to under the 50-day moving average to under 25. And I would probably at this point want to say that if it closes even the day I'm talking to you, over 30, a $5 risk is probably not too bad because this has the potential to go to 40 or higher. So that's it. I've given you a lot of ideas here to be looking at. This is a great opportunity when we see these type of corrections, because this is what's telling you here that everything that was really expensive has now gotten a lot cheaper. Now, sometimes cheap doesn't mean good, but again, look for the overall macro to stabilize and then look for the risk rewards that I'm giving you here. And if you have any questions of all, of course, you can type them into the box and I would be happy to answer them. Thanks so much. You all have a great weekend.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.